Welcome back. This is Chili Davis. I'm back to do another video. And today's video is just going to be about what is a day trader. And I'm going to go over some of the regular stuff I do usually, such as top stocks performing. And it is regular hours of trading right now. So I'm going to take a brief look at my portfolio. Okay, so first ticker we have is SBCE. So that's Virgin Galactic is up 4.6%. Second ticker that we follow, GBTC, Grayscale Bitcoin is up 2%. And third ticker that's real interesting, which is up, is 1.7, is Square, and SQ is the ticker symbol. It is up 1.71. So today looks a little bit like a throwback. There's a couple of few high tech. Tesla's up, Twilio is up, Pfizer is up, PayPal is up. So a lot of your tech is up today. And Virgin Galactic, at least in my portfolio, is up the most. So today's video, I wanted to just talk about day trading. What is day trading? And the reason I wanted to talk about it a little bit was because yesterday I did some videos on charting, and I wanted to be more clear to understand that there's a difference between trading and investing. And so I'm on the NerdWallet website, and it says day trading, how to get started. So it says day trade involves buying and selling stocks with the aim of earning and short-term profits. It's difficult to succeed at day trading, so investors should take precautions. So day trading is the practice of buying and selling stocks in a short-term time frame, typically in a day. So the minimum amount in general, if you're going to start day trading, should be about 25,000. Anything below that, you're not going to see the returns that you'd like to see. But of course, with this new meme stock frenzy, you're seeing it a lot differently. But it's you're kind of seeing it from a twisted angle, with the gains going up, 14 and 15%. That's not normal. So this goes on and says how day trading works. Volatility is the name of the game during day trade. So that means if the stock swings way up and the stock swings way down, that gives you opportunity. If the stock is really volatile, while it makes those huge swings, whether it goes up by 14 or goes down by 14, there's profit in that. There's an opportunity to jump in when the stock is on a low swing, and then as soon as it hits the high peak, exit this stock. Buying on more margin. So, I mean, some people, if they got, 25,000 in and, one stock, and they know that it's going up, they may want to borrow a little bit more, which, that can work for you and can work against you. I mean, it can be really dangerous, because at the same time, if the stock goes down, then you have to either pay the brokerage firm or you have to sell part of your stock. So you don't always want to be, buying on margin. It's better to just not use it, but people use it. So say if you wanted to buy $20,000 worth of stock, and you could purchase 10,000 worth of it, so you borrow $10,000 from your brokerage firm. So I mean, it's almost just like a bank. They'll loan you another 10,000, and then they'll charge a 3% or 4% interest rate on that. Meanwhile, you don't mind, because if you're making gains of 10% in a week, then the small 3%, a month is not going to hurt you on the stock. So just be mindful. People do it. Even Robinhood does it. They give you margin, which I just don't recommend it until you're very well seasoned. And here they give you a couple of brokerages: Interactive Brokers, Ameritrade, and SoFi. I like that. SoFi, no fees, no account minimums, and promotion $5 to $1,000. So they're giving us a couple of free shares of stock if you start with 5 to 1,000 with SoFi. So again, it talks about, what's a pattern day trader. As a pattern day trader, you're required to maintain 25,000 equity in your day trading account. That means, again, if your stock portfolio drops below 25,000, you have to put money into it. Now, I've seen this a lot. I got a good friend, and he inherited the money, over $50,000, and he put it in the brokerage account to trade, and he literally traded away that $25,000 within a year. So just be very cautious about the whole, day trading. It's great. You make $1,000 a day. It sounds sexy, but it's very risky and requires a lot of skill. Okay, so margin call. In addition to the 25,000, you need to meet at least what is known as maintenance margin requirement. Under the current set of FINRA rules, the current maintenance margin requires 25%, meaning that after any purchase, you must maintain 25% equity. So in a total year securities account, 50,000, and you had a margin of $20,000 loan, your equity must be 30% of 60%, 30,000 or 60%. So again, this goes back to if the stock begins to fall down in value. Let's say you own Tesla, let's just say $1,000 per share. Let's just make it simple, and it starts to fall. In this case, 60% below the $600 per share from 1,000. Then you would have to, start adding that difference back into your portfolio. So they talk about the difference between swing trading, trend trading, and buy and hold. And I think right now a lot of what we're seeing with the meme stocks, we're seeing trend trading, and the buy and hold is just a traditional. You buy ExxonMobil at the beginning of this year at $50, and you take a look at it next year at $80, and so you got your appreciation, and you sell out maybe the following year. Some people say buy and hold is always 3 to 5 years, but buy and hold can actually be just a year. So let's see what it says about swing trading. So while a true trader will close out position at the end of each day, a swing trader will hold for weeks or maybe for a month or two. So let's just say you're in Tesla or you're in Amazon and you're in like one of those wild bull runs. Tesla last year traded, I don't know, like 3% every day for like 3 months. It was like every Monday and every Tuesday, the stock was up like 3%. So maybe, you end up making 100% on your stock within a month. So then at that time you take some out, or sell your entire position. That's what swing trading is doing. It's like you either meet a time frame or you meet a certain amount gain when you decide to exit. Again, it's talking about strategy. With the right selling strategy, swing trading can lower your downside risk than day trading. Yeah, again, this is all to do with timing, because with day trading, you're trying to force to get that 1%. Let's just go with the example of 25,000, and you're like, man, I need, whatever, Tesla to go up at least 1%. Let's just give it out there. Let's just say you have $25,000 worth of Tesla shares and you're to get 1%. Well, what if Tesla has a bad day? So now, you're trying to do a put. A put is when you're trying to force the stock, or where you're trying to see if the stock will go low for the day, down, 1 or 2%. You're trying to make that $250 to $1,000. Again, it just gets very tricky with the swing trading. So trend trading, short term trend trading, studying a stock's past price movement to predict future behavior. Trend trading typically occurs after a matter of months. Thoughts, trends can exist for beyond this frame. Trends are identified as time between a stock's highs and a stock's lows during a given period. So we see that a lot with the meme stocks. As you've seen AMC go from 12 to 24, people took profit at 24. The stock went from 24 to 40. People took profit and when the stock hits 50, again, that's like a psychological mark. People, if the stock, triples in value, people are going to take profit. This whole hodling, I mean, you can hodl some stocks, but once that stock doubles, you can actually pull out your principal. So let's say you have a stock that's $10, and it goes to $20 per share. You can actually pull out that initial $10 per share. So if you had 100 shares and the stock doubles, you can at least pull out 50 shares of that stock, and you'll still have the same principal in the market. So there's some strategies you can do to stay involved in the stock market, even when it's very hot, and you can stay in a stock even when it's hot. So buy and hold strategy, which is widely accepted as one of the best strategies for long-term wealth, and it's exactly as it sounds. Buy a security, hold it for years or even decades, no matter what happens to the market. So that's just like, buying your Ford or your Coca-Cola for 10 years. And, it's just like anything. I mean, after a while, the, brokerage is holding your shares. And let's just go with the Ford example or the Coca-Cola, and Coca-Cola is paying a dividend too. So as the years go on, you're not only getting appreciation, you're getting dividends. So even if you don't take and get the dividends, you still accumulate more shares every time it's time for a dividend. So that's the cool thing about buy and hold. But you want to look at the company and study like the main three, like balance sheet, cash flows, future revenue, current revenue. You want to study all the key attributes of the stock or the company to understand, do they have assets? Do they have a lot of debt on their balance sheet? Where's their next stream of revenue coming from? I mean, AT&T has high cash flows, but they have a lot of debt. So there's not a lot of opportunity for the stock to grow a lot because they've got a lot of debt on the sheet. So, but they're working through it. So what is day trading harder than passive? Why is day trading harder than passive investing? So it shows here retail traders are competing with professionals, and in general, as your retail traders are competing with your Wall Street guys, your hedge funds, your big institutional investors, Vanguards and pension funds. And they have like all kind of tools and strategies that can pull off to, make profit in the market and sort of manipulate it. So yeah, that's just a quick video just about day trading and what are the risks. And this is Nerd Wallet. And we talked about day trading, swing trading. We talked about trend trading. And I just want to show you, here's just an example. This is my top stock performance group, that 25,000 or that 10,000, you can do it in different splits. So, let's just say you have $10,000 of Abbott, you have $15,000 of Teladoc, and you get 1% on each. That's 112 from there, and that's 102 from there. So that's roughly 1% of 25,000. So that would give you $250. And again, you can do the same thing here with Microsoft. The person who posted, they have $28,000 worth of Microsoft, and it's roughly make 1% on yesterday. So that was a $250 gain. And so this is the type of moves people generally make when they talk about building a position in a stock. Either they go in at 10,000 or they go in at 5,000. You know, some combination adding up to 25,000 would build a solid day trading portfolio. So again, I want to thank you for watching. Thank you for listening. And we'll see you on the next one.